Okay, good afternoon, everybody. Today is Wednesday, the 6th of October, 2010, and the market's closed here. I do believe we're live, just looking for confirmation on that. I'm going to assume that we are, and we are. We're down a penny in the SPY today, so the market held up nicely. Yesterday, kind of, took a lot of people, myself included, as I mentioned this morning, by surprise by rallying here, and we had broken that. What had been the range really that we were looking at was basically 113.60 up towards that 115. We were talking about how last week that had been really the range for all but about maybe an hour or so, and we broke below that on Monday and kind of held right at that level, but we were below the declining 5-day moving average. Obviously, we gapped higher and really, again, took people by surprise there. And this morning I was saying we basically needed to hold above this level here. I was calling it about 115.60. I think we could call that a successful test of this little resistance for now. And if we're to fall down through that level, we've got 115 next, and that's where we should find the rising 5-day moving average as well. So, the market continues to be in a healthy uptrend here. We had a slight advantage to the decliners today. That is, we had seen 1,400 advancing stocks, 1,500 decliners. But when you look at this 30-minute time frame, which is what we're looking at here, we still have a healthy pattern here that gives us these little shakeouts. Here we had this one shakeout, and then this shakeout here. And after these shakeouts, we've had these big gaps up above the 5-day moving average, which have really just further strengthened the market. So looking at the longer term daily time frame here, that is the 113.20 is has been support has been tested and held as support. We're 2 penny. The lows on Monday was 113.80. We've cleared the 115 level. Obviously, we want to see that resistance holding a support, and it looks like the market should be likely headed up towards about 118. That is the post flash crash highs right here. 117.68 was the exact high, but it looks like we're headed for a test of that level. And I think the market really held up. In particular, the NASDAQ held up a lot better than what you would have expected when you saw some of the carnage in some of these high flyers. So the NASDAQ we're continuing to hold up near these kind of flirting with the what had been support prior to the flash crash. So we're still flirting with this level, and if we can get through there, then there's new highs that look like they're around the corner for the NASDAQ. Here I've got these lines, I guess, still in place. This has been an important level right here at about $49.10. That's where we are really, and the next level below that should hold a support is that 48.80. So a little bit of hesitation maybe up in here. I wouldn't really call it more than anything other than that. I think that this week's low, that we saw, this recent low, right here, just at 48.90, will be an important area for the market to hold above the rest of the week. If we can hold that, maybe this market's going to push up through some highs. But when we talk about risk, you have to understand that we're coming into earnings season, and for instance, this EQIX. I know a lot of people like to try to buy stocks that gap down for a bounce. Well, that obviously never occurred here. And I think that when you look at a stock like EQIX and the massive damage done in here, and the fact that it closed so close to its lows, it's pretty impressive that the overall market held up better as well as it did. EQIX, isn't the most important company, but it did bring about some profit taking. Some other big names like F5, which traded the biggest volume it's traded in quite a while, maybe last couple of years at least, and a big down day, down 12.5%. Citrix down 14% on massive volume. Rackspace down 11%. VMware down 9%. CRM, Salesforce. So some of these big tech names really got hit hard, but it really didn't seem to be reflected in the average, which is a nice thing to see. What we have to stay focused on for the market itself, obviously, is to stay focused on the key levels for the market and not really worry about one stock or a couple stocks really getting hit hard until we see the market break down. It's just a couple of stocks that are imploding and the market holds up. Perhaps it's a warning sign. We'll know after the fact, but it does give us reason to again be alert that there are those landmines out there, because we are at the beginning basically of the earnings season, and earnings season warnings really in particular is what's going to do the damage right now. It was good to see that. Well, let's just talk about this the Russell 2000 for a moment first. But Russell 2000 still holding above that 68 level, so that's nice to see. We want to continue to see 68 hold as support. This market looks like maybe it's headed up towards about $70.80, $71 a share maybe, and we've got a good healthy uptrend in here. We've broken. I don't know why those are always on there. I don't get it, but we broke this important level, and perhaps we're heading up towards 71. So the Russell 2000 continues to be healthy as well. We've got all these rising moving averages. We look at a 10-minute time or 30-minute time frame rather. 68 is important. So as long as we remain above that level and then below that 67 and 66.50, as long as we continue to hold important support levels, we always want to have our guard up, but there's no reason for real concern. The semiconductors were down a little bit today, down 0.78%, so a little bit harder than maybe the NASDAQ, or actually a little bit less than NASDAQ was down 0.87%, but we continue to hold the important 27.5 level, and below that, obviously, the bigger level is $27 a share. That's really the important level. I wouldn't really be too concerned about semiconductors unless they were to get below that $27 level. The financial stocks have been, we saw yesterday that they broke past that 1460 level. I was watching that 1460 level. I've been talking about it for a while, and I just kind of sat there and looked at it like a dope and didn't take any action yesterday. But it did have a nice rally. It's still within this bigger range, and I've been saying for a while that these financials are pretty boring. And yesterday, Meredith Whitney said that she thought that there wasn't really anything to be excited about in these, and I agree with her. Maybe if we get above 1510, or maybe she agrees with me, but above 1510, then maybe it gets interesting to the financials. I think this was just a nice little blip. Let's say, it will be important now because this has been such a hard-fought level, that 1460 level, that we will want to see that hold as support. A break below it would be of more concern, or more reason to maybe get interested in those financials, because then we might be headed back down towards the 1420 level. But otherwise, the financials hold up okay. Gold is obviously just continuing to ramp higher. Today we saw that the gold miners, the GDX, really started to play a little bit of catch up to the gold stock. The GDX, that is, up 1.5%. It is out at all-time highs, and we've got a lot of healthy-looking stocks in there. Getcho Gold, or Gold Corp, I guess they call it, still looking like it has room to run. So this GG, when we look at that, American Barrick, those are just a couple names. Some of the, and then silver, SLV. Just huge uptrend in there. But back to American Barrick. American Barrick, real nice breakout here past the highs of 2009 at 48.08 or something like that. And on the weekly time frame, if we take a horizontal line and draw it across last year's highs, you can see it looks like American Barrick is probably headed towards about $50 a share. But some of the other ones like SSRI, which the silver strand had a nice day today. That's one that we were looking at, and looking like it's maybe going to head up towards that $25 level. So SSRI had a nice day, broke some resistance right here early on, and running nicely. So just make an audio adjustment. So the market overall we're seeing is holding up in spite of some reasons for concern in the individual areas like technology. I did have that was really all that I wanted to talk about here today. I do have some requests for stocks to take a look at, so let me do that. First, let's see. We've got Mill Christian wants me to take a look at OMC. I'm still holding it for a swing trade, is what he says. Omnicom. OMC, looks like, this looks like 113 on the SPY right here. So it looks like the market basically. That is that we have this inverted head and shoulder pattern. The bigger level is really down here between 39.50 maybe, and it broke out yesterday but fell back into the range. So Christian, I would say you just want to put your stop at a level that's comfortable for you. It's a little bit of reason for near-term concern, I guess, that it broke back down through that 40 level. So I'd like to see it get back above 40, and hopefully this could be the higher low right at that 5-day moving average. But otherwise, it looks like a decent looking stock. Let's see, I was watching, but I'm going to take a look at Oracle. Let's take a look at Oracle. Oracle's been a strong stock here. It's holding on to these gains. You could say it's really been just kind of consolidating here, building what looks like a launching pad that it tried to launch out of today. If we look at the weekly time frame, it's up at multi-year highs. Going back to 2000, levels not seen since 2000. But on that 30-minute time frame, it broke some resistance at that 2750 level, and seemingly wants to hold above that. I would say that worst case stop is below this bigger support near about 2675, but there's no reason that I can see that it wouldn't be able to continue higher here. I would be aware of any earnings that might be due out, but that's that's looking like a decent stock. Are any of the cloud stock cloud stock group worth watching, or are they done for now? I think racks, etc. I think you got to let the dust settle in here. There's no reason to go to buy, to try and go buy into this weakness that I can see. They need a pause. We'll see how they take a look, see how they respond from there. Rubicon, this is one that I've been talking about short, and continues to get hit. I don't know what these guys do, but they're a weaker tech stock. Canadians, sorry Sawyer, I can't look at Canadian. I don't get them. So and I don't trade Canadian stocks. Fourth Cubic wants me to take a look at GT. Looks pretty dead to me. I don't really see any reason to be involved in GT. It's a pretty low beta stock to begin with. It's kind of trading back and forth above and below these moving averages, and even for a short, it doesn't really look very interesting to me. It's such a low beta name. I don't really see much opportunity in there. Anyways, let's take a look at these ones on Twitter here. We've got thanks Josh. Josh did a nice job today on this Bullhorn show with Howard today. If you didn't catch that, and Sean S3 is saying, years ago did I ever trade ED? ED. I think when Vivus was involved in that group, I traded the ED back in here. Oh, you're talking about Consolidated Ed. No, I don't think I've ever traded. The utilities just aren't really typically good trading stocks, so that's not something that I typically look at. Better Be Ready, thank you for the retweet in that. Let's take a look at ENZN for you as a potential breakout. This weekly chart, it looks like it's coiled up and testing these highs. You could call this a cup and handle, I suppose, if you wanted. We've got the higher lows above these rising moving averages. Looking at a monthly time frame, let's see what we have here that's potentially gonna stumble this, or it looks like it's still got some room, maybe up towards 12.5, up towards these lows. Not necessarily that there's support from back there that far, but when you have to go back to 2003, 2004 to look for potential resistance levels, it's more the self-fulfilling prophecy that these areas become resistance, not because there's someone actually holding, I don't think, from 2004 who's looking to break even. It's just that becomes a magnet on the chart, an area that a lot of people are looking at. But on the daily time frame, looks like it's trying really to get above this this level here, and I guess you really have to wait for it to clear this top of $11.60. Today's high was $11.55. Looking down to a 30-minute time frame, it looks like it's it's in a decent trend and trades a little more than 500,000 shares. So looks like it could be a good one. DSB 212, 212 wants me to take a look. OPXT. Did I get that symbol right? Yeah, I did. 220,000 shares, $1.70. I don't know. I mean, I can't take this stock seriously. The weekly chart really looks terrible. I mean, I don't see any reason to get involved in this. And trading stocks that are only 220,000 shares on average is really, they're a roach motel. They're easy to get in, but you're going to have a real difficult time getting out of it. I would try to steer you away. If I knew you and liked you, I would say stay away from it. I mean, it trades all of $250,000 worth of $500,000 worth of stock a day. So it just doesn't really look. Euro dollars. Sean, no. I've never traded any euro dollars. I don't trade currencies. In fact, how about a look at Zion for Remittance 2002, Zion Bank Corp, just kind of looking neutral. It's shaping up a little bit in here, and I think maybe if it were to get above these highs, you could probably get a little pop up towards about 23.5 or so. And these highs, let's see, it's 22.20, 22.21. This one here is 22.27. Let's take a look at the 30-minute time frame. Zion looks like it could get going here, and I would say above these highs here probably of the last 2 days. Then you probably got a shot up near $23 a share. Let me take a look. So we've got this 100-day moving average and the 150-day moving average, kind of not really in the way, but just kind of consolidating near that 100-day, and maybe it gets up towards that $23 level. It looks decent. Let's see, what else do we have here? Let me take a look. It looks like I've got two more, and these will be the last two. So Daniel wants me to take a look at ASX. Let's take a look at ASX for Daniel. American Semiconductor Engineering, 672,000 shares a day on average, so it trades plenty of liquidity. My problem is, always say, every time someone asks me about an ADR, is that they gap almost every single day, and it makes it difficult to control risk in these ADRs. However, on this daily time frame, we're clearing some resistance in here. It's traded some good volume for particularly yesterday. Trades good average daily volume, so it looks like it's on its way with maybe a stop below the the low that we've seen this week, just about $4 a share. Looks like maybe it could be headed up towards 4.5 or so. So it looks like a decent looking stock. I wouldn't trade it, but that's me. That's my personal preference. Jack, thanks for the retweet as well. So it looks like that's going to do it. I think we've got all of the questions answered here, and we're in this earnings season, so it's time to really be aware of when companies are reporting, and be aware of about group sector strength and weakness as well. This cloud computing thing blew up in a lot of people's faces today, so you just have to move quickly to the sidelines when that happens, and let the dust settle before deciding to get back involved trying to pick a bottom in one of those names. So thanks again, everybody. I will talk to you again on Friday.